Welcome back to Immigration Updates. Today, imagine you're sitting at your kitchen table, filing your taxes for the first time as a green card holder. You've done everything right. Steady job, paid your taxes, followed every visa rule. Then you get a letter from the IRS. It's about a bank account back home. One you opened years before you ever thought about moving to the United States. A savings account your parents helped you set up. A small account you forgot even existed. And now the IRS is telling you that you owe a penalty, starting at $10,000. This is not a rare story. It happens to thousands of green card holders every single year. And here's what most people still do not realize. This rule isn't new. It's been on the books since 1970. But almost nobody explains it clearly to new immigrants, and that silence is exactly what's costing people their savings. Let's talk about what's actually going on, because this is one of those things that sounds small until it isn't. If you are a green card holder, the U.S. government considers you a U.S. person for tax purposes. Not a visitor. Not a temporary resident. A U.S. person, with the same reporting obligations as a citizen. That includes something called the FBAR, short for Foreign Bank Account Report. And here's the part that catches people off guard. If the combined total of your foreign accounts goes over $10,000 at any point during the year, even for a single day, you are required to report every one of those accounts to the Treasury Department. Not just the big one. Every account. Even the ones with only a few dollars sitting in them. This is where many people make a mistake. They assume this only applies to large investment accounts, or offshore accounts set up to hide money. It doesn't. It applies to ordinary things. A savings account from your childhood. A joint account you share with a parent overseas. A pension account from a job you had before you ever moved to the United States. None of that matters to the rule. If the total crosses $10,000, you're required to file. So why does this feel like news right now, in 2026? A few reasons, and they matter. First, penalty amounts are adjusted for inflation every year, and the 2026 numbers are higher than before. A non-willful violation, meaning you genuinely didn't know about the requirement, can now start at over $16,000. A willful violation, meaning the government believes you knew and ignored it, can reach the greater of over $165,000, or 50% of the account balance. Per year. Per account. That number can grow fast if multiple years are involved. Second, reporting thresholds for a related form, which we'll get to in a moment, were adjusted this year, which means more people fall into the reporting net than before. Third, and this is the part that worries immigration attorneys the most. This isn't only a tax problem anymore. If your foreign accounts show up inconsistently across different filings, or don't match what you disclosed during your green card or naturalization process, USCIS or DHS may start asking questions. Did you misstate your assets? Did you leave something out during your immigration interview? That's not just an IRS conversation anymore. That's an immigration file with your name on it. This is not just a recommendation. In some cases, it is federal law, enforced by the Financial Crimes Enforcement Network, a bureau of the U.S. Treasury. Now let's slow down for a moment, because the FBAR is only one piece of this. Most green card holders have never heard of the second form, and it can be even more expensive to miss. It's called Form 8938, and it exists because of a law called FATCA, the Foreign Account Tax Compliance Act. Here's how it's different from the FBAR. The FBAR only looks at foreign bank accounts. Form 8938 looks much wider. Foreign stocks. Foreign mutual funds. Foreign pensions. Ownership in a foreign business. Even certain digital assets held on exchanges outside the United States. If you hold any of these, and you live inside the United States, the thresholds work like this. If you're single, or married filing separately, you must file if your foreign assets were worth more than $50,000 on the last day of the year, or more than $75,000 at any point during the year. If you're married and filing jointly, those numbers double, $100,000 at year end, or $150,000. Here's why this trips people up. You can be completely under the FBAR radar and still owe Form 8938, because it counts things the FBAR doesn't, like foreign stocks and pension funds. And the penalty structure is separate too. It starts at $10,000 for failing to file. If the IRS sends a notice and you still don't file, that penalty can climb to $50,000. And if the missing assets are connected to an this is where many people make a mistake. They assume that because they don't owe any additional tax, they're safe. That's not how this works. These are information reporting forms. The penalty applies whether or not you actually owed a single additional dollar in tax. You can have paid every cent you owed, and still face a significant penalty simply for not filing the form. Now here's a scenario that surprises a lot of people, and it has nothing to do with hiding money. Say your parents, still living in your home country, send you money to help with a down payment on a house. Or they pass something on to you after they're gone. If you receive a gift or an inheritance from a foreign person, and the total from that person and their close relatives adds up to more than $100,000 in a single year, you are required to report it, even though it isn't taxable income. The form for this is called Form 3520. Most people assume that because a gift isn't taxed, there's nothing to file. That assumption is exactly what gets people in trouble. The gift itself, in most cases, isn't taxable. But failing to report it when required can trigger a penalty of 5% of the value for every month it's late, up to a maximum of 25% of the total amount. On a $200,000 inheritance, that's a $50,000 penalty for a transfer that was never taxable in the first place. And this threshold isn't per gift. It's cumulative. If your mother sends you $60,000, and your father sends you $50,000 in that same year, the IRS treats that as $110,000 from related parties, and the filing requirement kicks in, even though neither individual gift crossed the line on its own. Take a breath here, because I know this is a lot of numbers. Let's slow down and look at why this keeps happening to honest, hard-working people, because it's almost never about anyone trying to hide anything. A 2023 report from the Treasury Inspector General found that more than 40% of green card holders who should have filed an FBAR in the previous year simply didn't. Not because they were avoiding it. Because nobody told them the rule existed until a penalty notice showed up in the mail. That gap between getting a green card and actually understanding your U.S. tax obligations on worldwide accounts is where most of these cases begin. Most travelers and new immigrants do not realize this until it becomes a problem. They think their tax obligations start and end with their U.S. paycheck. They don't realize that the moment you become a U.S. person for tax purposes, your entire financial life, everywhere in the world, comes into view. The savings account from before you immigrated. The pension from your old job. The small piece of land or investment your family manages back home. All of it can be relevant, even if none of it produces a single dollar of U.S. income. So let's talk about what you should actually do, because this is where the video becomes useful instead of just alarming. Start by calculating your numbers honestly. For your foreign bank accounts, add up the highest balance each account reached at any point during the year, not the balance today, the highest point it touched. If that combined total crossed $10,000, even once, you need to file an FBAR. The form is called FinCEN Form 114, and it's filed electronically through the BSAE filing system, separate from your regular tax return. Next, look at your broader foreign assets, stocks, pensions, business interests, and compare them against the Form 8938 thresholds we just covered. If you're not sure whether something counts, that uncertainty is itself a signal to get a professional opinion rather than guess. If you've received a significant gift or inheritance from family abroad this year, check it against the $100,000 threshold for Form 3520. Keep in mind it's the combined total from related individuals, not just one transfer. Now, if you've already missed a previous year, here's the most important thing in this entire video. Don't panic, and don't go silent. Silence is the worst move you can make. The IRS has programs specifically designed for honest mistakes. The streamlined filing compliance procedures exist for exactly this situation, people who genuinely didn't know about these requirements, and want to fix it before it becomes a bigger problem. The IRS has also said it will review reasonable costs before automatically assessing certain gift-related penalties, which means a well-documented explanation can genuinely make a difference. Acting early, before the IRS contacts you first, consistently leads to a better outcome than waiting and hoping the issue disappears. Keep your records for at least 5 years. Bank statements, transfer receipts, gift documentation, anything showing where money came from and when it moved. If a family member overseas sent you money, a simple written record of who sent it and why can matter enormously later if questions ever come up. And if you're not sure whether your situation qualifies for any of these forms, this is one of those moments where a short conversation with a qualified tax professional is worth far more than guessing. Guessing wrong here doesn't just cost money. In some cases, it can follow you into future immigration paperwork, if your financial disclosures don't line up across different government forms over the years. Let's bring this all together with a fast recap, because there's a lot to hold onto here. If you're a green card holder, you're treated as a U.S. person for tax purposes, starting the moment your residency begins, not when you naturalize. Any foreign account, savings, pension, joint, inherited, counts toward a $10,000 FBAR threshold. Cross that at any point in the year, and you must file FinCEN Form 114 by April 15th, with an extension to October 15th. Separately, if your total foreign financial assets cross $50,000, or $100,000 if you're married filing jointly, you may also need Form 8938, with penalties starting at $10,000 and climbing to $50,000, plus a possible 40% accuracy penalty. And if you receive gifts or an inheritance from family abroad totaling more than $100,000 in a year, Form 3520 comes into play, with penalties up to 25% of the unreported amount. None of these forms create new tax on money that isn't taxable. They exist purely so the government knows these assets exist. And missing them, even by accident, is what creates the real cost. Beyond the money, remember the immigration side. Inconsistent financial disclosures across your tax filings and your immigration paperwork can raise questions you don't want raised, at the exact moments when you need your record to be clean, whether that's a green card renewal, a naturalization interview, or a future visa application for a family member. This isn't about fear. It's about not finding out the hard way, the way thousands of green card holders do every year, usually from a letter they weren't expecting. These rules have existed for decades. What's changed is how seriously they're being enforced, how much higher the penalty numbers have climbed, and how many ordinary families, not wealthy investors, not people hiding money, but ordinary working families, get caught by surprise simply because nobody explained it to them clearly. If this applies to you or someone in your family, don't guess, and don't wait. Check directly with the IRS and FinCEN's official guidance, or talk to a licensed tax professional who understands both immigration and foreign account reporting. If you've realized while watching this that you might have missed a filing in a previous year, that's not a reason to panic, it's a reason to act this week, while the honest mistake protections are still available to you. Share this video with someone you know who might have an old account back home they haven't thought about in years, a parent who sent them money, or a small pension from a job before they ever set foot in the United States. This is exactly the kind of information that saves people real money when it reaches them in time, and costs them real money when it doesn't. And if you want clear, accurate breakdowns of the rules that actually affect immigrants, visa holders, and green card families, subscribe to this channel. We go straight to the official sources, we skip the panic, and we give you what you actually need to stay protected. See you in the next video.